So I'm Maysam. I'm an ex-banker. I've spent 15 years in banking, doing various things, working in senior roles at JP Morgan, United Overseas Bank. I've worked in risk, corporate finance, investment banking, generally, and now I'm CEO of Elephantee, which is a app startup. I was in Iceland about 10 years ago during the financial crisis, and it was a very interesting experience because I was sent there to recover money from failed financial institutions, and what I saw was the impact of banking on ordinary individuals, people who were paying their bills, keeping their mortgages up, and they lost their businesses and their houses for no fault of their own. And I think, to me, that was a wake-up call of asking questions around, why is that happening? What can bank do to change that? And yeah, so I spent the rest of my career figuring that out. And I realized that banks can't help people because of fundamentally how they're set up. And that's why I started Elephantee. What you have to understand is that there is a push from government to go cashless, and the consumers' banks are working towards becoming more and more cashless because for them, managing cash is a cost overhead. So if you think about a bank fundamentally as a profit-making enterprise, what they're trying to do is trying to cut cost to make more profit, and being cashless makes more sense for them because A, they can do the same goods and services more quickly at lower costs. So they've been doing that for a while, and there are a number of products out there. You've got debit cards, you've got credit cards, you can do internet bank exchange, you can pay money online to somebody. That's all cashless payments. It is a sad story because there are people who are vulnerable, currently in the economy. There are people who are unbanked. According to the FCA Live survey in 2017, 3% of the UK population are unbanked or don't have a bank account. That's about 1 million people. So, of those 1 million people, that means they have no access to services if it goes completely cashless. So the first challenge is to give them those services. But the issue is that as soon as you go to a bank, to open a bank account, there's a major hurdle. And I think fundamentally what needs to change is how it's seen as whether it's a service or a right of an individual. And I think that's where we are at this point, is that it's no longer a service that an institution provides, it's a right of an individual to have a bank account and to have that service available, because you go into things like poverty premium, etc. Yeah, so poverty premium is the premium that a poor person pays for goods and services that everybody else enjoys, right? So anything like bank accounts. A good example is overdraft services. Overdraft services exist, and also, you can have planned overdrafts or unplanned overdrafts. So what happens is that, once you run out of money in your account, and if you go over, you use an overdraft. And in this instance, if you don't have an overdraft facility available, which is a loan, then you get charged a penalty rate for going over. Now, for people who are financially vulnerable, who are not keeping track of their money, or who have income challenges, the problem with them is that they suddenly are in a situation where they're being charged penalty rates by banks because of being poor. And an interesting statistic in 2016, this number, the amount that banks earned from this was about 1.5 billion, right, pounds. So we're not talking about chump change. We're talking about big money. And so there's been a huge clampdown from government as well. But poverty premium also exists in other forms, like getting paper bills. Because you don't have a computer, you want paper bills. Now there's a charge for asking for paper bills. Also, if you're living further away, for example, and if you're traveling into work because you can't afford rent centrally, you're paying a premium for traveling in through trains, etc. according to FCA Live survey, we're talking about 50% of the UK population is financially vulnerable. So it's everybody. It's your nurses. It's students. It's teachers. It's anybody. And what's happening is that we're at the worst state than any time in recent history from a financial economic vulnerability point of view. Cash is good because you've got people who are vulnerable, who need support, who you need to use that currency. There are small businesses that depend. The cost of using the machine, for example, is still quite high for them. It eats into their profits. People lack basic skills. UK ranks 9th amongst the G20 countries in financial literacy, and this is very poor. One of the most Googled terms in the UK is what is APR. So the amount of what people understand about finance is it requires more information. They're already doing that to a certain degree. Apple Pay, Google Pay, you've got PayPal. So there's a lot of push into this already. Banks were comfortable in defending their position, before Apple Pay came along. And I think the important thing here to understand is that the pull for all of the cashless payments came from consumers. So until Apple launched Apple Pay and consumers saw the benefit of using Apple Pay, businesses and banks were quite happy moving into cashless using their own instruments. But what they've done is they've fundamentally changed the game of how cashlessness works. Now you can use a phone to make a payment. And that fundamentally has changed the game. Of course, these mega super corps, they are not only good with technology, right? They're also good with data. Fundamentally, a cashless society is a society of data, right? What you're doing is you're exchanging value as data. So, a company that can manage data really well will do really, really well in this economy. And Supercorp certainly have that position. Facebook already has a banking license as well. They haven't done anything with it. So who knows what they will do and what products they come out with. But, certainly they're a big threat now for the banks in this space. Governments still have access to your personal information and your transaction information through backdoors that they've built into banks, into technology companies, under anti-terrorism laws and under anti-money laundering laws. So all of that, anonymity is basically a myth from a real perspective, because if the government wanted to know what you're spending your money on, they still can do that, even if you're using cash to a degree, because unless it's a small amount of money that you're spending in a corner alleyway, most banks have tracking softwares already under all of these laws to understand patterns, and they throw up those red flags to show somebody is doing something that they should, for example, even with cash. I think a good example is how credit cards work today. Credit card is cashless, effectively. And what you can do is you can go to another country today and use your credit card in that country. Even though your credit card is on the underlying GBP currency, right? So you can go to the US, spend it in dollars, and the bank automatically exchanges that rate for you. So fundamentally, cashless will work exactly the same way. It's just a matter of agreeing that exchange rate, making sure that the infrastructure is in place, which it already exists, and then making that possible. So it's entirely possible. The challenge is going to countries where infrastructure doesn't exist, and there are very few of those left. And when you go to those countries, what you do is you convert your cashless currency to physical currency at the airport, just like you do at a TravelX or something. You go and exchange currency. So it's still entirely possible that you can have a cashless economy working with an entirely non-cashless economy, but it just means there's certain processes you have to follow. There are opposing forces. I talked about the unbanked, so there's still using cash. There are those challenges, so it's hard to say. However, if the push is right, then maybe we can see it as soon as 2025. Because the technology is all there. It's not about the infrastructure, it's not about the technology, it's not about the capital behind it, it's not about the regulation behind it. All of that exists. So the only thing that's stopping it is how do you make it all inclusive for society. That's the biggest challenge. And there are companies that are working on it. So